Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Monday, the 24th of May, 2021. It's the last week of May, in fact, so we should get some evening up later in the week. It was a strange day today, too. Very quiet, no economic data to speak of whatsoever. Gold was up about $6, $7 on the close, and it's giving that all up right now, pulling right back to even. You had a good day in the stock indices as they were a little bit higher. Energies are fairly flat, and it is time that you move over to the August Brent. I still think you could be fine in the July crude oil, but you've got to move over because you're now coming to the end of the contract, and it's time to start tracking that. In the gold market, we're up, as you can see, early on for the week, 1.4. You can see where you're at. When we take a look at a daily bar chart, you're still in this area of a lot of resistance. We haven't been able to get away from that. And the pattern of the chart remains one that is bullish. Higher lows, higher highs. But it does act early on tonight. We're going to get something of a correction. The question is, where do the breaks come in for support? One area is way down here at 1857.90, but if that area were hit, you have a problem in another zone. Not the Bollinger Band, but this, the embedded reading. Would it hold up if you went back to that 1860 level? I don't know. But what I do feel that's going to happen, because you're so well embedded, these breaks are getting bought until the red line closes under 79. Now, one of the things I get asked all the time, and it is all the time that I get asked about it, if you had to pick a favorite thing, the charting course I just did called the Enhanced Bollinger Band, if I dropped everything else, that would be the one that I'd hang my trading on. It's simple to understand. The patterns show over and over. You have to have a tolerance for risk, of course, but you do with anything. But it is certainly, when I look at everything, it's my favorite, okay? And it took me years to put it together where I could create a course for it, and I just did. Well, when you look at this, I'm going to stick with what I said. I think this market gets bought on the breaks. The trade is still looking for possibly that 1912 area. I went to the June gold, July silver. I've got allergies, so if I was watching the news tonight, they were talking how bad they are. June gold, July silver. I dropped, if you will, the other silver, the May silver, because it's going off the board. So we'll take a look at this. The differential 67. As you can see, the gold market is still trading over the 18 in the ratio, which means gold is stronger than the silver. And when you look at July silver, you actually have a short-term trend that is down. Lower highs, lower lows, calling for a challenge of the 18-week average of closes, which you did on the day that it broke down right here. Now, did it hit it? No, it missed it by 4 cents, and I wouldn't be surprised if it hits it. It doesn't have to, but as long as it stays over, where's the bias? Upside. So do we have anything that's tradable there? No. You've got a market that hit its upper Bollinger Band. Again, what I teach, the first challenge, the pros took money off the table, and boom. Did you ever embed? No. So that's very important. In the copper market, lower highs, lower lows, oversold already. Now, if the world's not so worried about inflation all of a sudden, or interest rates climbing, it's a two-part element here. What's going on? You know, China's making all these moves within to stop inflation and the curb hoarding. They've got power that nobody else has, so I wouldn't bet against them. On the other hand, the world's the world, and if you want these companies to grow, watch it. Also keep your eye on Chinese debt. I understand there's 1.3 trillion, the equivalent dollars in America, of corporate debt coming due, and much of it underwater. It's going to be interesting to see what the Chinese government does with that. But in any case, as you're coming down here, I'm watching what's going on. The market, I expected a correction. I frankly thought the market would hold in the 440, 450 area, and I thought 470 was high. Gotten what I thought. That's what I was saying on BNN TV. In the platinum market, I was looking for more downside, and we've gotten it over the past 48 hours. Now, the market also got under the 100-day average into the lower Bollinger Band, and it's moved to the back right-hand side of it. Trend down though. So we're getting a pattern here. We've got, let's come back here. Copper down, silver in a downtrend. Interesting that both of them are. And we go to the palladium and we have another downtrend. Is it a wonder that gold's backing off right here? I don't think so. So keep your eye on all this. This market's in a correction phase. I don't think anybody else is pointing that out, how these markets have done that. When you get under the Bollinger Band, you're getting excessive. So I wouldn't get overly bearish right down here. In the dollar index, I look at right here. So both numbers were under 20 on the close today. Both were under 20 on the close on Friday. Not so on Thursday. You need to keep them both under that in order to get and lock in the bearish momentum of the market. Markets don't like to embed most of the time. You wouldn't believe that by looking at these charts, but it's the natural course. So we'll see if we get a little bit of a rise to stop it in the dollar index or not. If the dollar goes up, that's more pressure. On what? On the metals. Ethereum. When it made the first hit of the lower Bollinger Band, I said, I bet the pros are taking money off the table there. I haven't changed my opinion at all. There's nothing bullish on the chart. The chart's in a downtrend. You've hit downside targets and you're oversold. If you call that bullish, okay, the fact that you're oversold. But that would be about it at this point in time. It was interesting to see Ray Dalio, the famous hedge fund person, talk that he'd rather own cryptos than bonds. Interesting. I guess he wants the volatility out of the market. You know, what you heard me say a few minutes ago, I'm going to stand behind. If I had to pick one thing out of my whole trading career and what I've learned, it's this course. And it's not because it's a new course. The more I look at it, the more it throws out a chart, the more comfortable I get with what I've been showing on it. So I don't have to do any one thing. That's the beauty of it. But if you were to ask me, what would I pay attention to? I think this, because it works with long-term, short-term trends. The word work is the interesting thing. Nothing works all the time. Do we understand that? So when I say work, I am not saying every trade you put on is going to win. I'm not even headed in that direction. But I find that it offers more probability for me on the right side of the market than the wrong side. There's different things that I use with it, but I explain it all in the course and you make up your own mind. This is no more than, again, a trading course teaching a technique. Where you take it's up to you. I know where I take it. Go to our website under the word education. You can learn all about it there. I'm Ira Epstein. You have a great day.